Good morning, everyone. All right. So markets are kind of just gyrating in a little tight range here. Just stalled here at this resistance, but not going down yet. I guess we're going to see whatever they're waiting for here. Fed minutes, trade talks, the wall, whatever the news of the day is that gets things moving one way or another. But right now, you can see the tight little range. And when we look at the futures, it's amazingly tight for the futures market. So, going nowhere the last couple of days after a little gap up. You can obviously, everybody knows that it's at this resistance area, this 280-ish, in the next whole number. And so, as I said yesterday, even with the weekly charts, I looked at the weekly charts. Here it is. Weekly charts, we see right in the area of this prior high. Amazingly deep retracement after such a move without a break of a prior bar's low. From a V bottom, no less, not even a W bottom. Impressive, to say the least. A little unusual. Looking at just prior historical market moves from this type of a move down. So since it's at this obvious resistance point, our market internals, which we've reviewed, are up at historical extreme levels. We have breadth giving a divergence, meaning that there are stocks that have slowed down in their upward momentum. Doesn't mean they're in a downtrend, but their upward momentum has stalled. So our breadth internal is making lower highs. And, this was a good sign for the move that it got this extreme. And then, of course, the expectation was, okay, it needs to pull back a little, and it never did. As we reviewed yesterday, along the way, there was like one red bar of significance on the whole advance. So we'll see what this market's going to bring, what news it's waiting for that might get it to move lower. And a move lower could always also start with a significant gap higher. That's a good sign as far as, a bearish event if we were to get a gap up and a reversal down. Just normal type of price action for traders, investors, fund managers to want to sell in this area after a move of this extent in a relatively short period of time. So we'll just see how this unfolds. And Qs, similar story, 100% retracement. And a lot of times these retracements actually go greater than 100%. They do their best to get the majorities to jump in at the worst time, sentiment, breadth at an extreme, and then the level of retracement being what it is. And then I don't know that it definitely will, but I know many times when it comes to markets, they go too far and they push past the resistance point before the turn actually happens. So that's something to keep an eye on. To see if they actually push past their respective resistance points that we're looking at. Similar to the Russell here, which is right at this prior high, the topping tail high, right there, just under it, but it's exceeded that initial part. So this was where prices went up and had a reversal back down on a daily chart and formed a topping tail on the weekly chart. Where are they here? Really just doing nothing here pre-market. And the transports had, I guess, the better day. It's a wider bar yesterday, but it's still in the area where it should make a lower high. And for the connect the dot trend line aficionados, they're probably, I guess, looking at this and maybe saying, hey, we've got a new buy setup here, possibly. Or a new trend. And this is why I say, trend lines are so subjective and honestly useless, because they don't suggest a trend change, and it would have to take out this major resistance point. So right now it's getting about 80-90% retracement here. So we don't need trend lines. If you're using them, just know their shortcomings as far as an indication of a trend change or support or resistance, because they're not. Diamonds, same story that we're seeing pretty much everywhere. Little move up and just a go nowhere day yesterday, and they're going nowhere here this morning for the moment. Futures just dead in the water at this resistance area. Buyers backing away, rightly so. Any intelligent market player knows where prices are at in relation to price resistance, and considering taking money off the table at this point as related to this type of a pattern. Qs, and let's back this away a little bit. Same story, going nowhere at the 200 MA, waiting to see some type of capitulation, move up and back down, because the assumption is, because of the extent of the move, not breaking a prior weekly low in 7 going into 8 weeks here at resistance, just a common sense approach to what's happening here, to have a bias that sellers are going to begin to step up here. Grinding up, this grind up per se has gone for a while, Tony, right? Yes, the odds of the party ending are high, and we are odds players, absolutely. So, looking at these trends, and we've, because the futures show 24-hour trading, we do have some larger red bars along the way, but still having made higher swing lows. And this is now our major support area, looking at the futures, and this is consolidating. And for the moment, we recognize this as buyers absorbing supply. Right? It's at resistance, and we say it's absorbing supply for the moment because it's not going down. So while the sellers are, taking advantage or stepping up in this area here, buyers continue to step up as well, regardless of the extent of the move and the resistance. We saw the gap down yesterday, a small gap down, got bought, and prices went back up, and they looked like they could roll over, but buyers stepped up once again and held their ground, and no significant weakness. Dow, same story, right? Little consolidation at the top of a wide range bar, weekly at resistance, pre-market going nowhere, makes for tough intraday trading because volatility is extremely low, which we can take a quick peek at, and you can see where it is. This was at the low, and here it's come down. Maybe it continues to go down to this level. This is something that we're keeping an eye on to see if it does, but volatility is at a low extreme. We've got option traders at a bullish extreme, which is bearish historically. Breadth is diverging. Prices are at resistance, price resistance area. The retracement isn't deep. The short of all of that is caution. This is not the time to get aggressive on longs. Bonds are just hanging out here. And I mentioned this yesterday. This is something to keep an eye on. Bond, you can look at TLT to see if it starts to break higher, because I can type there. We want to see if you don't have the bond futures, and you don't need to, just see if TLT starts to break higher. If it does, then interest rates are going to come down.
Hey, Greg, I thought of you today when Gartman was on CNBC talking, the Gartman letter guy.
Mm-hmm.
And they were talking to him about interest rates, and he said a Capraism. He said, well, interest rates are going to go up when they go up.
Right. Yeah. 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 But everybody wants to know why, and I recognize what he said in that way. And people in the media and most people don't like that answer because,
Right.
it's a trader's mentality that when it goes up, we'll all know. And they're not going up yet. They're not going down yet, but it looks like they will. And that's a concern because we're keeping an eye on this yield curve situation, because if it inverts, and this is what we're keeping an eye on, folks, to see, and these are various yield curves to see if they invert, and you can see how close the shortest is to actually inverting versus the longest to the 3-month versus the 30-year. The inversion is down here, so it's got room to go. Nonetheless, if yields go down, well, this is going to get dangerously close to an inversion. But as I said, people want to know why. If they know why, they feel secure as to what they're going to do with their money. And that's understandable. But the markets don't always work that way to give you a clear why. And even when you think you know the why, sometimes it bites you anyway. So this is what we deal with in the markets, and you either accept it and have your plan and make adjustments along the way, or this is just not for you. Gold continues its march up. It's coming up near some resistance here, as you can see, getting a wide range bar as it begins to accelerate higher, which suggests it's closer to the end of this move, which makes total sense. And I look at this chart and I'm like, Greg, why weren't you looking at this down here thinking to buy it? And it's because I was focused on the equity markets at the time. But this was an obviously bullish rounding bottom down here, and a red bar ignored. And
Now, Greg, to interrupt you, we did have long GLD in our ETF trader.
Yeah, but I didn't, Dan. I didn't make any money.
No.
So I always look at this kind of stuff, from my, to inform everybody. But, I'm just giving my own thoughts as I look at this as to what I did myself.
Right.
Anyway, a really nice move. It's up into resistance, topping tails up here where sellers stepped up before. So everything seems to be in alignment, whereas, what moved up, like gold or the markets, they're all at their respective resistance areas and likely to stall these moves. So, but none of them are stalled yet. And even oil, which looked like a no-brainer sell last week. And I know this is kind of climactic and they're not the greatest sell, but that was a pretty potent red bar that reversed back down from a bottoming tail bar, and there was no follow through. So with that in mind, it's possible that this is another one of those situations of, bringing up the rear. And bringing up the rear is what's underperformed begins to outperform, whereas money starts to flow into where investors, managers think that, hey, this hasn't participated. Let's start putting some money over there because it's not likely to go down as much as what has moved up a lot, and may bottom out during any kind of corrective situation. So, oil negated that. We have retailers negated a sell setup, and this is more in alignment with a sell setup that isn't really climactic. It is a big move, but the difference between the latter and this one is just it moved up to an area of minor resistance. It stalled. There was a topping tail that took out the high. It was a no-brainer short if it had taken out that week's low, and it didn't happen. Rather, it reversed back up, which is suggestive of it can continue to move up. So retailing is a spot where it looks like money could continue to flow into and begin to outperform where other parts of the market underperform. And surprisingly, like, Amazon doing absolutely nothing, and everybody, I guess maybe the Amazon bulls kind of sitting on the edge of their seats here, hoping that it doesn't break below this neckline support here and they can get it moving up. But unlikely, just under what I would say logical thinking as to the location of where the markets are, that this is going to move up significantly at this point in time. So there we have it. We'll see what the day brings, and all yours, Dan.
All right, I was just going through some marijuana stocks. I forgot to do this yesterday. There was a big article in Barron's. We'll do it together later when we slow down. But I think that's actually why CQC was gapping down yesterday, because it was a bearish type article saying they're overpriced. So look at this beautiful 1, 2, 3 CBS bullish 15-minute chart. Well, it's actually, I mean, look, negated this gap down, ripped up, filled the gap, and it's a bullish consolidation in the upper, you know, that's a big old flag pattern, which is a bullish consolidation. So here's the CGC gapping down, Little Island reversal yesterday. Sector MK though holding well. Open positions, tandem, been in this for a while. Covered call. X, we have a covered call that expires Friday. Urban, covered put. That's doing fine. I tightened the stop yesterday. AMD, put spread for Friday. That's doing fine. I tightened the stop. Gulf Delta, we're long stock. It triggered yesterday afternoon. J&J did not trigger, but over the highs, it's fine. And, you know, if the markets start to weaken, I'll just go ahead and cancel it. Netflix, it hit the, you know what? We might have gotten filled into the close there. Did anybody get filled on Netflix? I doubt it, but here was the trade, because I know we were looking at it at 40 cents earlier in the day. Let me check real quick. 340, 330, but maybe we just adjusted the next week. Yeah, there's no way we got filled. Let's keep an eye on that for selling the same strikes for next week. And the only caveat, though, you know, again, is the overbought market. But if we'll still do it. Bullish pattern, we'll do it. Qs, we have a bear call spread that expires Friday with a stop over 173. OUT, we bought stock yesterday. NEE, it was a put spread, but I don't think we got filled at the minimum. LGF.A, we shorted stock on that bearish consolidation on the daily. Sherwin-Williams, we went long stock and that pulled in, as you can see on the 15-minute chart. W Whiskey, yeah, that one we bought over the high, and it closed weak. And that was kind of a pre-earnings type of trade, so we'll just let it play out. That's all I got there. On opens, a bunch of gappers. Tesla was all over the news here, I guess Musk is, you know, blabbing again on Twitter and, you know, gonna piss off the SEC with the settlement, whatever. But under last week's low, which is right here, 301, let's look about selling a call spread, both for this Friday and for next week. HSIC, 5980, very bearish gap, 30-minute low we'll keep an eye on. WORX, this looks like a penny stock toy. I got no interest in that. LVS, I want to watch this for a put spread. I like the weekly. It's a little too volatile for me to trade the stock. But I was looking at Caesars. Look at Caesars negated that big old ugly red bar on last Friday. And it's a bullish pre-market. That's a put spread idea. LUV is not earnings, so I don't know what's putting him in a bad mood today. $55, gapping under this. That's a beautiful bearish gap. I have it in this little middle window here, both for a directional and call spread candidate. Little AU, another gold stock, powering up, but there's no setup there. And so I looked at this whole Kilo Lima. I made a quick little chart lesson on it and put it in Facebook. Look at this huge multi-month W pattern, which on the weekly chart will be, a tighter bullish W pattern. He had a nice 1, 2. Well, I call it a minor 1, 2, 3. But look at this beautiful one. That is just a textbook 1, 2, 3 breakout there. Red bars ignored. Nothing to do with it now. The wicks. This is a bearish island reversal now. This is a very ugly gap. 115. If it can't bounce very much, that's a beautiful call spread candidate on earnings. Well, no, I don't know if it's earnings or not. Let me look real quick. The volatility is going to rise with the gap down. Yeah, 220. So good. Volatility is going to be high. So that's when I love selling options. When the VIX is high, which it's not, Greg just showed you, the VIX is way the heck, oversold on support, which is part of the reason also it's been hard for us to find juicy option selling candidates. I put another chart in Facebook on this this morning. I just love these bear gap negateds over the over yesterday's high. That's a day trade idea. Whiskey Bravo. This looks like wow, this might be a core trade, Greg. Look at this thing. I remember. Hey, trader, remember on this day? Last week, this day and this day, we were wanting to sell out of the money puts, calling it a no-brainer, and I didn't want to do it ahead of earnings. But now it looks fantastic. That is going in a window. But look at that, all time frames are in agreement. 30-minute high, I think this is a core trade. Daily, weekly, big old W bottom with a shakeout. And you got a monthly buy set up. I like this. Here, let me just throw a quick screenshot onto our advisory letter. Sierra Oscar. Nothing to do. ICPT had its gap yesterday. You might get a day trade. That's a bullish, 15-minute, downtrend, sideways, breaking out, price void. But I'm not messing with that. Oh, sinus apparent. All right, cool. This is spotty but bullish. I like the weekly 1, 2, 3. I don't like the daily whips. Garmin, I said, oh no, I didn't say anything on Garmin, but that's a bullish gap, 75.71. It's excessive. Is that to all-time highs? No. I remember doing a chart lesson right here on multiple time frames being in alignment, right over the high of this 929 bar. Nice. CBS. Ooh, Debbie's not going to be happy today. She, some people held banking on bullish earnings, fundamentals, whatever. And, you know, we had a nice little discussion saying, make your decision, your risk to reward. Don't should all over yourself this morning if it goes against you. And there you have it. There's a casualty of holding over earnings when you have a bias of, you know, thinking it's bullish. All right, back to Whiskey Bravo. I see him perking on a intraday chart. Hey, G, it will be, you know, 30-minute high. Let's see what the markets do here. A little bit more aggressive. You know, this might be something you scale into in third lots, but I like the fact that it's turning red here pre-market because, oh, Gustavo, if you can put your drop down. Gustavo was making fun of Alex there, but so I want Alex to see what you said about him. So I like that it's red, because then if it turns around and makes a new high, then it negated this morning weakness. But let's go ahead and get ready though. Let's see what the prices are. All right, this little red bar right there, 344.81. So we could probably do Ladon. Well, we're in the call spread and I'm not liking it. I mean, you know, I talk about Groundhog Day, the movie, and every time we try to put our toe in the water, you know, if aggressive, you might even look at 350, 340 Netflix for Friday. But if you want to give a little more comfort, not comfort, cushion, 335, 335, 325 is only 50 cents. Wow, look at this Expedia rocking. Ah, see, look at that. I put that in Facebook saying over yesterday's high. That's a nice pattern, folks. Herbalife. Now see, this morning it was up at 58.40 here, which was over all of this consolidation. That's why I said, look, if it were gapping right there and then could take out a 5, 10, 15-minute high, that would have been a no-brainer put spread. AAL. Oh, also Ladon. Everything's, you know, expect a lot of whip here. And who knows what they're going to put in the minutes, the Fed minutes. So that it could be the trigger if they say something stupid in there to put the market in a bad mood. I'm looking at our opens here to see if there's any problem children. And I don't see any. All our opens are fine. I'll go through and tighten some stops. Look at our X-ray doing better. MRO is still a go over the highs. I'm going to set an alarm here at 1920. All right, love, need to watch a bounce. Wicks, I'm sure it's going to be spreading. And then let's look at Whiskey Bravo again. And I'm going to check the puts on Whiskey Bravo also. Hey, the calls on Wicks. Was Wicks earnings today? Did I check already? It said 220, so I'm assuming it's pre-market. All right, so this ain't bad. The 125s, oh, it just dropped. They're spreading. Yeah, I was looking at the 125, 130s. Whiskey Bravo. With high premiums, maybe we start out with a covered call. But I like this chart. Shoot, they're spready. The 64 puts for Friday, 15 by 75 next week. Hey, 9 days. These are juicy. I like this. All right, let's all focus on. Oh, are you serious? I thought Whiskey Bravo was this morning. Let's see, this is the same discussion we had last week, darn it. Darn, because I'm getting ready to short some puts for next week, the following week, but not if there's earnings. All right, well then shoot. All right, forget it. ADI, nothing. Continue. Devon, whoa, look at Devon gapping up on earnings. Coup, I said, is a day trade today over yesterday's high. That's a day trade. GCOS, yeah, ITW, bullish 1, 2, 3. I hope it closes like that. DIOD, it's a climactic sell set up with a 2-bar reversal. That's a short under today's low, a half under today's low, the other half yesterday's low for a day trade. Little Iggy, we were talking about shorting yesterday. Overstock, I was watching for a put spread, but it was too spready. Tal is a mess. Oh, here's my Weight Watchers. Yeah, somebody was asking me about shorting it on a bounce yesterday, Jose. I don't know if that was you or not. And I said, no way, because look at the, it had a deep retracement and I didn't like this big bullish W pattern on the 15. BBY over today's high is a go. I like that. It's just, it kind of needs a little more something to get it going. QSR is kind of just slowly cruising. That looks higher. EVH. Trader. Remember, this was the one of the video I made over the weekend, where this is in one of your bullish fundamental lists. And I said it looks like a short. I was right. What a nice collapse yesterday. XES oil is up. We're in that. Retail looks higher. Target didn't take out the 5-minute high yesterday, so we aren't in it yet, but over yesterday's high, it's fine. I don't like the tail as much. We're in TGX. Oprah, yeah, that's the woman. I was trying to think of the spokesperson yesterday. And we did the Sherwin, which is just totally neutral right now. DEC, we have a put spread for March. Apple making a new high here. What a very, very tight trading range. But wait, you know, I'm gonna be cautious here ahead of this Fed thing. Oh, and Insight didn't take out the 5-minute high yesterday, so over the highs are okay. Our Gulf Delta still a 1, 2, 3. X-ray looking good. We're capping our gains at 23.5, which is fine. We'll let them take it. Let me move the stop here. Oh, I already did yesterday. All right. So that's fine. You mean X? Yeah, right here. X. X-ray. We have a covered call. Hey, trader. Tilray. Tilray, I think, has earnings this week because I was looking at it. Yeah, check earnings. But whenever I see something perking in the marijuana patch, I look at the sector, Michael Jackson. DEC was in the weekend letter. The advisory letter. Do you pay for it, trader? Do you read it, or do you just like having another trading letter? Yeah, we shorted the 135, 125. So it's an open trade. It's fine, but it definitely wasn't a stock. Directional. CBS alarm. Oh, that looks good. So let's buy this. Over what amount? Alex is buying Tiffany. So yesterday's high was 50.82. Kind of have sell setups though on the intraday charts, indexes. You know what? I'm going to hold off on this. We got plenty of longs already. I don't want to get overloaded, even though I love the pattern. I just am a little iffy on. There, so I instead of making it official, I just gave them that. But it looks great. You know, you can even. It looks great. What can I say? If you can day trade it and then have a tight stop into the minutes if you want. Here's Tiffany. Wow, those daily bars are whipping. Tesla working on negating its gap. Wow, still in a downtrend though. It's actually a sell setup now on the 15-minute chart using pre-market data. LUV. I know we aren't going to get any juice for the 59s. Like 8% higher. That's crazy how the brokerage downgrade can make a stock drop 10%. That just doesn't seem right to me. So, Greg, are you listening? Or are you out boating? You know how we talk about the market's all